All right, let's do a PTC ETF update.
Okay. Well, we know last week we had loss of funds all week.
Right.
And we were talking about that maybe being a
Wait,
change.
what's a loss of funds?
Well, outflow.
Outflows.
An outflow as
Okay.
opposed to an inflow.
Okay.
Right? Because we want to see more getting invested, and that will raise the number of players and the amount that's invested, that kind of thing, right?
Right.
So in the outflows were maybe an indicator that there was a difference, that people were not as excited to get in. So that really isn't the case. If we start looking at those numbers, what that was Grayscale was bleeding harder. Mm-hmm. So Grayscale went to the first day, the Monday, it was $640+ million in outflow. So that's more than $500 million in outflow in a single day.
So it's a net outflows were bigger, but there's still inflows on the other side. It's just that Grayscale have bigger outflows.
Yeah, so if we look a little closer, it was Grayscale was outflow was $642 million. IBIT was $451 million in.
Right.
So everybody else was smaller. Those were the bigger players.
Yep.
But the point being that it was, had they had an outflow closer to their average, which is around $275 million a day, which is incredible. Mm-hmm. But had they done that, then IBIT would have outdone them in terms of more would have been going into IBIT than was coming out of Grayscale.
How much is in IBIT right now in Bitcoin? In Grayscale. They're having, how much is in there?
Grayscale still has about $27 billion in assets.
We think people are leaving there because the fees are too high.
Yes.
But at $27 billion, they're still making a lot of money. As people leave, why lower? I just kind of think about this. Why don't they lower the fees instantly and keep the money? But they're making a lot of money at those higher fees right now.
Oh, yeah, they're making a lot of money.
So maybe when it drops down to the levels of IBIT, Grayscale goes down, maybe then they'll start lowering the fees to keep people in. I mean,
well,
why aren't they doing it yet?
Think about it. It's about money, right?
Yep.
Okay, so if you have 20 billion plus invested,
right,
and you're getting to take a little percent, a little tiny fraction of a percent.
Yeah.
Okay, that's a significant amount of money.
Mm-hmm.
Now, if you used to have 40 billion and your pie slice was bigger because you were the only game in town,
right?
That's great, but now you have these other competitors, and some of them are all the way down at zero fees. Mm-hmm. Are you going to give up all those fees? You're making a lot of money.
Even though you're bleeding.
Even though you're bleeding, you're making a lot of money.
Right.
Okay? And some of those investors are not moving.
Out of Grayscale.
Some of them are going to continue to just pay you the fees.
Right.
Whether that's because it's a teacher's pension or some other kind of a fund that doesn't want to make the frequent trades or make, I don't play in that world, as I've said before, so I don't necessarily know what their drivers are. But just like in humans, there are people who get in and they pay a little bit more and they don't care.
Yeah.
They buy their soda at the gas station and they pay an extra 50 cents, but it was convenient. I was getting gas, whatever. Okay, they're willing. Some fraction of those people are willing to stay there, and they're trying to get. They're making a lot of money, and they're trying to see who's going to stay. Mm-hmm. And if they just keep bleeding, eventually they'll want to be more competitive. But if my fund, look, the next nearest fund is what? It's IBIT at about $9 billion. $9 billion.
Yeah.
So if I'm 3 times your size,
right,
and I'm getting 5 times as much fees off of 3 times as much, I'm making 15 times the money you are, and I don't know what those numbers are. I'm just throwing numbers at you. I'm making a huge amount of money compared to if I tried to come to your fee scale. Mm-hmm. If I came to your fee scale, I'm immediately throwing away tens of thousands, hundreds of thousands of dollars.
Right. Yeah, that makes sense. And they're probably also waiting a little bit as they bleed out. The other guys might start raising their fees, and it's not such a reason to leave as if the other guys raise their fees.
Yeah, I'm not familiar if an ETF has an upper limit on how much they can issue. I don't know these things.
Right.
Right? I mean, is there a way that they could say, there's only so much pie and we're all going to be something, fractional of a I don't know.
I don't know either.
The bottom line is I don't know.
Right.
So, we can pontificate if we want, but I'm not
right.
advancing the case. But what we were talking about was outflows in the previous week, and then what are the inflows. So we've had inflows all week, although I don't see numbers reported for Friday yet. But what we saw was higher bleed in Grayscale, and then that started to taper off. And then we went positive barely, not even by $1 million on Monday.
Yep.
But then we started to pick back up. It was 400 plus million Tuesday, 240 million on Wednesday. So the numbers pick back up, and what we are seeing is again sustained inflows. And so what I see there is more went out of Grayscale, and that caused the numbers to skew.
Yep.
But I don't see the trend changing yet.
No, and BTC's back up above 70 now. Like today we're at 70. Didn't we hit 64 last week?
I thought it was 63.
Was it 60? Well, it had gone down during that week, right? And then we're back. I mean, it's back up at 70 today.
Yeah. I don't know what it is right this second. I didn't pay attention because I'm a hodler.
Right. You're not watching it every hour?
Yeah. No, every second, right? They say you can't sleep in a bull market. Well, you can if you're not day trading.
That's right.
I don't look for the thing that's going to pump and dump in a 4-hour span. It doesn't help me.
Right.
That's not my play.
Yeah, because the swings are pretty big in crypto.
The swings are massive, and I've watched people make hundreds of thousands of dollars, and I'm like, I don't know how to play that. That's great, but I don't know.
Yeah, that trading is risky.
There are a number of ways that you can approach it. I mean, you can go at influencers, you can go at wallets, you can go at listings.
To
minting.
watch, right? You mean to get...
As far as trying to get your pulse on something that you can go and invest in early. There are a number of people that try and provide that kind of information, but in truth, you're going to invest your money. You better have confidence that you know what's going on, and that's really hard in these nascent crypto plays. Just understanding what a market would be for something new that you've never heard of before is going to take some time.
Right.
And so you kind of have to know what area you want to play in, and then start looking at that and monitoring activity so that when those new projects pop up, you can be right there and go, oh, that's one of the kind of thing that I'm interested in. I'm going to go buy some of that in a pre-sale, or I'm going to go get it on, it's freshly minting, so I'm going to go get some and hold it and see what happens.
So do your research, investigate the things you want to invest in. Don't just take a tip from a friend at a party and go buy some shit.
Yeah,
right?
Well, I mean, you can degen if you want, but don't expect to be a winner doing it that way. Some people get lucky. I mean, I talked to a fellow that told me that he knew a guy, he put $1,000 in every coin he believed in. And that's what he did. He just kept putting $1,000, and I was like, that's a great way to go broke. He says, no, he hit it. He's a multimillionaire now. Because he was in a bull market, lots of things were going up, and he just happened to hit something that was like 100x.
Right.
It was fortuitous, and his timing was good.
Yep.
Most people won't be that way.
No, because there's 20,000 to pick from. There's a lot of cryptos.
A lot more now.
Is it really? Are we above a 20,000?
There were 22,000 at the end of 22.
Oh, geez.
Yeah.
Yeah, we have more.
No, there's more.
There's a lot.
There's a lot more. And the thing is some of these are going to be around and some of them aren't, right? In terms of even the short term. So looking at, saying there were 22,000 in 22, but 2023 was a bear market. Some of those aren't really viable at this point.
Right.
They don't do anything.
Right.
That doesn't mean that they're gone. They just either low activity or, dead contracts or whatnot.
Yep. So the ETH ETF that we see, the applications are in for, it might or it might not happen in May. There's been some movement on the Fidelity application.
Fidelity did. Fidelity applied for ETH ETF with staking.
Okay.
So they want to use I don't know if it was 20% or they have a percentage they want to apply as available for staking.
Okay.
And that may or may not be a problem. It depends on if they can do the staking inside their custodian. If you use somebody like Coinbase, you can, stake there without leaving their site.
Right.
If you're on them anyway, they're your custodian. So whether you're an individual or whether you're a big company that's having them be your custodian, they're the ones managing the keys. They're the ones that's securing it in cold wallets, this kind of stuff. Right. So if they're staking and you can do that yourself without leaving, then that's probably an acceptable risk profile.
Sure. Right. And that makes that really unique from the BTC ETF. I mean, there's no staking going on in that. So it's not generating additional revenue for the ETF if you want to invest. You're just getting the Bitcoin rise in price. But if you're buying into the ETH ETF, this is another source of income This right? That's going to pay
Absolutely.
out. That's unique. That's
Yeah,
a
well,
unique feature.
it's your money making money, right?
Right, it is.
It is in a way. In a way, it's actually making money, not just like leeching it.
Right. It's doing something.
Yeah, it's doing work. It's performing a service to secure the network. So
Well, do a quick explanation. What is staking on ETH? So people understand what we're talking about.
well, you're delegating the power of that to a node.
Okay.
So somebody who's operating like a block producer is going to have to have a certain amount of ETH on board, and they're going to get rewarded for doing the work. So that ETH, in effect, is getting rewarded for doing the work.
Right.
So
Whereas Bitcoin is proof of work, there's no staking going on. It's a whole different type of network,
it's a
right?
different kind of network.
So in this case, the money the ETH itself is verifying the network, is verifying the blocks, right?
Yeah, well, your proof of stake miners, your miners,
Right.
They're being paid to run the EVM to produce the blocks, and their ETH is a measure of how often they get to do that work.
Right.
So how often you get to be the one that gets paid. You have to be there all the time, but you're not always the one that's producing that next block.
Right.
Verifying doesn't pay. Well, it does, but it's complicated.
Right.
It's, when you actually produce the block, then you're the quote winner.
Right.
Right. And then you get the block reward and
Yep.
the gas fees and whatnot from those people. So some of those can be tremendously profitable blocks, and others are just a block that has some pay.
Oh, it's not, because on Bitcoin you verify a block. It's right now what, 6 3/4 Bitcoin.
It's 6
is the reward.
6 1/4. But what you're talking about is the Coinbase.
Okay.
So not to be confused with Coinbase, the company.
Right.
Coinbase is the amount of coin that's minted in the block for the block producer.
For the reward.
It's a reward.
Right.
Right.
So right now it's that much every time until the halving.
Yeah.
But ETH, it can be different, you're saying.
Yeah. Well, you have gas fees.
And they go up and down depending on the type of transaction.
Yeah. And if you want to pay more gas, the miner can choose your transaction to include in his block to get your gas. So it's cherry picking the mempools. What it's doing. You're going out and you're looking and you're saying, oh, here's a computer program to look at the mempool and see everybody that's offering the highest gas.
Right.
And wherever that highest gas is, take all those transactions
Right.
and put them in that block that I want to get that next block because they're paying to come faster.
Yep.
Right? Some of those people make mistakes and pay a lot.
Because they want to make sure that they're verified on that block.
Yeah, but they pay in ETH instead of GUI. So they promise, 10 ETH instead of 10 GUI.
Oh, and
Sometimes it's a mistake.
And they still have to pay it.
Yeah. Well, it comes right out of their wallet. If their wallet is big and it's deep and they have it,
Right.
it comes right out of their wallet. So every once in a while you hear about somebody who paid ridiculous amounts of gas.
Right.
And it wasn't even a special transaction.
Right.
It's just that they wanted it to go and then they made a conversion wrong. Or they entered the value wrong and then they sometimes they get it back, sometimes they don't.
Right.
It's at the miner's option.
And I didn't know that the rewards were different. It could be different each time. I didn't know that.
Even in Bitcoin, the rewards are different.
Vastly different or just slightly different? Because it depends on what ordinals and what's going on.
It depends on what specialized activity is happening.
Okay.
Right. So when you can get tipped, it's like you're getting tipped. I want mine in there, so I'm gonna offer more to the miner to make my block come in.
Oh, okay.
Okay.
Right.
So it's not gas because it's not running an EVM, but it's like tipping.
In addition to what we said, the 6 1/4.
So the
block
6
reward.
1/4 is a
That's fixed.
So that is what you get because the block was produced. It's actually minted on that block. But all those transactions have transaction fees.
Right. Okay.
The transaction fees also go to that miner that produces the block.
Right.
So the big payout right now is the 6 1/4 Bitcoin.
Okay.
Okay, which is about to go in half.
Right.
Eventually, that won't be a payout at all. In another 100 and so years,
Right.
there will be no Coinbase mint. It'll all be transactions.
Right.
It'll all be about transactions. And so there's a controversy in the Bitcoin community over how those fees are going to be. Are they going to be enough to secure the chain, and is it incentivizing the miners to do right?
Right.
And this question comes up every time there's a halving, because the rewards are going down.
Yes.
Right. And if you think about it, you have to go back 4 years. And what was the price of Bitcoin 4 years ago when they had the halving? And it was when they were getting 12 and a half. So when they were getting 12 and a half, was Bitcoin half the price or less than half the price? It was. So
I could look that up.
well, what I'm saying though is that over time,
Right.
there's a reduction in the amount of the Coinbase reward, the minted reward, but the price appreciation is compensating for it. Right now, the price is 70K, and back then it was under 10K.
Right. Yeah.
So
Yep.
just numbers, like people get rich by waiting. We were talking about this with the guy that was in jail for 4 or 5 years in Germany. It's like,
Right.
it was like, if I paid you $50 million, would you spend 5 years in jail?
Right.
You might.
If the reward of walking out was 50 million?
You might.
I might.
You might. You'd have to think about that, right?
Yeah.
I mean, I'd have to think about it. I don't think I want to do 5 years in jail.
What kind of jail? It might be worth it.
But
Right.
I'd never have to work again.
Right. Maybe if I was 25 years old.
I'm just saying,
and I
like,
could
there'll be
pick the-
some people that take that bet.
Oh, yeah.
Right? And
Heck yeah.
and I got to think that the people that are dealing dope are probably younger people, because you don't see too many 65-year-old guys trying to sell crack on the street.
Right.
Just
No.
not the way it works.
Right.
So seems to me like the patience scale is what's wrong with most people. They want to get rich tomorrow. They want to have a meme coin run up
Right.
tonight and tomorrow be a millionaire. But right now we're seeing the greatest shift in the financial capabilities. The biggest gains in crypto are going to happen in the cycle. There are going to be so many people that make money enough to never have to work again if they play their cards right. And we can all be part of that if we're smart, and everybody's not going to be smart.
No, not at
This
all.
is the thing. You don't need to go out and spend thousands of dollars on miners to go be a miner, because you're going to make all this money mining. If you held the Bitcoin for 4 years, what's it going to be worth? It's only the cost of what it was to buy it when you bought it. I don't have to spend $10,000 for a Bitcoin miner so that I can maybe get a block reward if I'm lucky enough to get into a pool that wins on that, or I hit a block myself.
Right.
This is that there's a lot of ways to make the money, but it's a longer time frame than most people want.
Yeah. Recently, we found out there's a problem with Apple computers and some vulnerability. Let's
Yes.
talk about that.
Okay. So Apple's got a series of chips called their M chips.
Okay.
The M1, the M2, and the current one is the M3. These are specialized chips that go in their system, and they...
Desktop computers, tablets.
Yeah, so you have to figure out if you have an M chip or not.
Okay.
You can find out by looking at your hardware information.
Okay.
So I'm not an Apple guy. I don't own one. I couldn't show you the screens on how to do it.
Sure.
But similar to how you can do it in a Windows machine,
Right.
there's a way to find out
Yep.
what your hardware is.
Yep. Go to your system, see what. Yep.
Yeah, and then maybe it doesn't tell you have an M series chip in yours, but you can go look up your model and find out if your model does.
Okay. So an M1 through an M3.
M1 through M3. So what's going on is there's a process. Let me see. I had opened it up here so I could give you the right term. It's called DMP, and DMP is the memory prefetcher. So data, in order to make your computer run fast and give you the answers you want in a low lag environment, your computer is guessing what you're going to do next, what your next instructions are. And because of the way that your software operates, it's kind of predictable. If you start opening a browser, there's a series of events that can be predicted.
Okay.
Right? And
Yeah.
the same thing is true with all different kinds of things that you would do on a pad, on a phone, on a browser, where you're taking actions. The processors can pre-guess what you're going to do.
Okay.
And they do that so they can draw in the slowest piece of the process, which is memory fetch.
Okay.
Okay. The challenge comes in these M series chips where this memory fetch there's confusion in the process and the data is mistaken for address information or mistaken for storage locations. And what happens is if you can force this to happen over and over again, you can recover a memory space that is the encrypted data in unencrypted form. So like an Apple offers a tunnel security, so you send your messaging, it's secure from end to end.
Okay.
Right? But at each end, you have to have some unencrypted information to use to make the encrypted part work.
Okay.
Okay? And it's similar to how you use like a seed phrase or an encrypted key to access your crypto, like through your wallet. These things are stored in a similar way, and in this vulnerability allows people to have that memory stored into cache. Cache is a second layer of memory between main memory, the memory of your computer, and the processor.
Okay.
And it's privileged so that the processor goes and accesses it. But there are two modes for it. Some of it is your device, your application or whatever on your device can access cache, and you have more strict areas that are privileged.
Okay.
But with this error, the memory storage can be confused and stored in the unprivileged area and then read by another program. So you could access directly the memory and read it. And through repeated reads, you can successively work your way through areas of memory that are potentially storing encryption keys or the passcode that you're using to encrypt with.
So it's taking that encrypted information, unencrypting it, right? So it's not
It's
encrypted.
unencrypted. It's unencrypted in privileged space.
Okay.
And it's inaccessible to you.
Okay.
But what's happening is the memory prefetcher is getting confused and it's pulling that memory over into cache
Right.
without it being in the privileged area.
Okay.
So now you can use another program to go and access cache memory.
And read those passwords.
You're reading raw data. So it's not like it's going to say, here's my password.
Okay.
Okay. It's going to be like strings of hexadecimal characters and whatnot. But by parsing this and running this over and over again against the privileged area and extracting that information, you can start gaining knowledge about that information.
Okay.
So eventually you'd start to get things like the root key of that phone or the crypto key to your MetaMask wallet. So the answer is that, if they could patch it, they would patch it. But because it's in hardware and it's a hardware flaw, it's not patchable in the M1 or the M2. In the M3, there's an opportunity to shut off some of this prefetch work. But this is at a cost of performance because you're eliminating the prediction engine that is making your phone fast or making your computer
desktop,
fast or making your iPad fast.
Okay.
So by eliminating prefetch, you're eliminating I'm going to guess what you want next and get it for you before you need it.
Oh, it's going to slow it down.
It's going to slow down.
Which is why you have an M3 chip to be faster.
Well, people buy the new iPhone because they want it faster. People buy a new laptop because my laptop is slow.
Right.
Right? It gets slow because you have an expectation that goes up.
Right.
It's not just that it got slower because it's got more stuff on it. You see that your friend's computer is lightning fast. Now you want a lightning fast computer.
So to patch this, you're going to slow that down.
Yeah.
Ooh.
And I got to think that there's a lot of people in the Apple world that, are going to be upset that this is a flaw that they let get into all these things. And I suppose there's potential for lawsuits.
Oh, yeah.
For discounts to upgrade to something that doesn't have this. But there's no quick fix.
And the M1 and M2s don't even have that fix at all. They can't do anything.
They can't do anything in the
just
M3.
vulnerable.
And the M3 is a current chip.
Right.
So we're talking about we only found the problem. We didn't solve the problem. So that means the phones that are on the shelf at the cell phone provider, if they have it, if they have that chip in them, they're vulnerable. If the laptops that are at this Apple store have the chip in them, they're vulnerable.
Right.
Right now, today.
And there's no software patch.
I don't think, to be clear, I don't think the M chip is in the phones right now. I'm not sure, but I know that they're in MacBook Pros, MacBooks, Mac Minis, Mac desktops,
Right.
In iPads. Not all of them, not everyone, but that's why I say you got to go find out, because if you're running on one of those, eventually somebody will be able to compromise you. And to be clear, it's you have to do something wrong, and they have to know that you are vulnerable, and they have to work at it. So it's not a panacea. It's not a, oh, I'm in trouble.
Right.
But now that the flaw is known, people will start working on how to do this. And the way that people get hurt whether it's an Apple, whether it's a Windows, it doesn't really matter. The way people get hurt is they get crafted against. They craft some kind of malware that you have to click on, or they offer you this app that you have to download, and it has this little piece in it that's doing something on the side that is not what you want it to be doing.
Right.
Okay? And that's going to eventually be something that you might be offered. It could be embedded in an app. It could be somebody sends you an email and you accidentally click. So, you don't want to leave yourself open long term. So the answer really is to move your crypto wallets and your crypto information off of a device that's vulnerable.
So that's the mitigation section here, is that there's, to mitigate this problem, you've got an Apple with one of these chips. Just don't trade your crypto on that computer.
It's the only mitigation they have right now. And that's literally take your stuff off.
Right.
Right? If you unload the app won't be trying to prefetch the data for you.
Right.
And so your seed phrase and that other stuff are not, your passphrase, your unencrypted passphrase are not going to be offered up because you're not trying to run the app.
Okay.
That doesn't say anything about the vulnerabilities within Apple itself. So assuming that their tunneling encryption is compromised, that there's a larger issue there. It's not just crypto.
Right. You're vulnerable across anything you have passwords for.
You're vulnerable. Yeah.
Ouch. Okay.
Anything that runs under the encrypted channels and anything that runs in privileged memory can be accessed. So.
All right.
Sketch.